Okay, so welcome everyone once again. Here is today's webinar where I'm going to break down the watch list. This week only the 6 pairs we have, and then from next week we will include the new watch list as well, which will be GBP USD, AUD USD, and GBP NZD. And obviously we are going to remove gold. So from next week we will have an updated watch list where gold goes out of the picture and these 3 pairs are coming into the picture. But once again, in the remaining days, 2 days of this week, we are going to trade with the 6 pair watch list. All right, so let's just break down. First of all, Euro US dollar. So what took place on Euro US dollar ever since yesterday's breakdown and ever since the FOMC got released in the evening is that basically we had this range. We had this range right here, and this range was broken starting from this movement, and price broke out of the range. And then there was this little area right here where we could pull the Fibonacci technically from this low point to the high point, or even from this little candle to the high point, and this level got mitigated. And if I'm not mistaken, yeah, this level got mitigated and then the low got swept out, and then here in this range price created a nice movement where we took the longs yesterday. And then FOMC kicked in with a really strong bearish movement, which means that US dollar is increased in value. And on all of the other US dollar pairs, you will see that US dollar increased in value. And this is what we see right here. This is FOMC candle. Therefore, this candle can only be confirmed, not traded. Only reconfirmations, but since this is a 4-hour range as well, we can pull out the Fibonacci, because what we see right here is that after taking out this high point right here, price aggressively dropped down with the FOMC candle, and with the fundamentals, likely Euro US dollar will keep pushing deeper. And I'm expecting technically these double bottoms, because yeah, these are relatively double bottoms, not just relatively, but almost perfect double bottoms. I'm expecting these double bottoms to be taken out. So I'm going to mark it out as liquidity. And what we're also going to do right here is that we are going to pull out a new Fibonacci range. You guessed it right, from this high point down to the low point. And on this 71 level, on this new bearish 71 level, we can expect short confirmations to happen. Why it's great is because we have Asian high. Let me just show you the Asian high on the 15-minute time frame. We have Asian high located just below this 71 area. So what we are expecting right here on the 15-minute time frame is that this Asian high, highest point of Asian session, will be swept into the 71 area. And after having this sweep, we can expect our confirmation intraday to happen. And with this, we will have a really nice probable setup that we can target the double bottoms with, and we will be able to short here. So this is basically the major plan we are expecting on Euro US dollar. Anything else besides of this plan on the 4-hour time frame perspective is not really valid, so I'm not really going to create new perspectives besides of this one. And if something else happens, obviously you will be updated. But you know that if this range breaks, for example, to the upside, then what you do is that you pull out a bullish range coming from the low to the high point, and you will expect long confirmations here. But this is really just the future. What we are focusing on right now is this 71 level and the confirmation of this 71 level. And once again, that Asian 15-minute high point is a really nice confluence that this liquidity will be taken out. And that will be the best scenario if price will take out the high of the liquidity, high of the Asian session, taking out the high, and after taking out the low point, and then we will continue down to sweep the double bottoms. So yeah, this has a pretty nice probability to happen. This is what I'm expecting in the remaining 2 days of the week. And basically nothing else. Yeah, we can't really create any other scenario, so moving on to USD GPI. On USD GPI, what we did, what price did, is that now it created a new swing break. So the swing high is broken, which means that we can pull out a new Fibonacci range, and that Fibonacci range will be this one, because this is the low point that initiated the high point break. And technically, this whole entire candle right here is a black, order black. So we can expect confirmations there. Any other area where we can pull out the Fibonacci from? Technically, we can pull out from this low point as well, but you know that lines up with the the first Fibonacci level as well. So yeah, basically we are expecting confirmations, long confirmations anywhere in this region right here. So if price comes back down to this region and creates a confirmational entry, then we can expect some nice confirmation. Maybe this Asian low will be taken out. So pay attention to the Asian low, because currently this candle low point on the 15 time frame I'm going to show you, that candle low point, that Fibonacci low point, is the Asian low. So that has a high, I would say relatively high chance to be taken out. And basically If that is getting taken out, so price comes down, sweeps the Asian low, and then confirms price action, then we can take longs because technically we will still be in the overall external range right here. So if once again confirmation happens anywhere in between this region, in this circle, we are going to take longs, targeting the top right here. And yeah, most likely USD GPI is going to continue to push to the upside with the fundamentals, with the technicals, both of them together lining in a bullish perspective. So we are expecting bullish confirmations. Anything about the 15-minute time frame cannot be really added because, you know, we just broke a swing high point, so we cannot use the 15-minute time frame. We can only use the 4-hour time frame to confirm price action in 4-hour regions. So not useful 15-minute time frame outlook right now. So we are switching to the next pair, US dollar Swiss franc. On US dollar Swiss franc, what has happened is that previously we took shorts in this bearish range. This was a bearish range. I just did put out a new recap video yesterday about the trade we took right here. There was a nice short trade where we took a nice 4% profit or something like that. And basically now this region is swept out. So the short, you know, tip it out, we closed it, and now we have new perspectives. And what we have as a new perspective is that, as you can see, price took out this Fibonacci high point. There is a sweep on that high point. I don't know. I don't know if that will be correct to short from here, and not just I don't know, but I would say that it will be incorrect to short from there. Why I would say that is because price is now fundamentally bullish again and creating really strong bullish movement on the 4-hour time frame. So shorting after the sweep of this little internal high point will not be the best scenario to actually use. Therefore, what I will do is that I will pull out a range right here from low to high point, and there will be a 71 level located there. You know, this is still a valid range because it broke this previous internal high point. And it not just broke the internal high point right here, but it also broke this less recent high point because there was another less recent high point that was previously wigged out. And now with this movement, this is broken. So this high point is taken out and is broken. And the cause of the break was this low point. So what we see here also is that price, let me just actually mark it like that because that will, you know, it doesn't matter. So what we are expecting right here is, again, the confirmation and mitigation of this 71 level. We are going to add another 71 level right here, which is below the current one, which is below the less recent one. And as you can see, guys, this is a protected low point because price took out the liquidity right here, took out the less recent low point there. And from there, it aggressively skyrocketed to the upside. So this is the less recent protected low point. So I would say that long term, we are bullish right now on US dollar Swiss franc, combining the fundamentals with the technicals. I would confidently say that we are bullish on US dollar Swiss franc. So the overall plan right here, first of all, 15-minute time frame, what I'm going to show you is that this is the exact same scenario as on Euro US dollar, where we have Asian low point. There is the Asian low point. Lowest point of the Asian session, just above the 71 level. So what we are expecting here is basically the takeout of this Asian low point into the 71 level and then a confirmation entry targeting the 4-hour external high point. This is the first scenario we are expecting to happen. The second one we are expecting is obviously if price won't be able to create the confirmation of this less recent level right here, then we are going to expect this 71 level protected region to be confirmed. And to all the 4-hour time frame traders who are trading the 4-hour time frame directly, this could be a nice point to set a direct limit order at. So if you're trading the 4-hour time frame, you can place a direct limit order at this 71 region. You know, entry goes here, stop loss goes to the 1 level, and the TP goes to the 0 level. So you're entering here directly and letting position run up to the 0 level. Once again, if you are trading the 4-hour time frame, this is a good solution for you. If you are not trading the 4-hour time frame, then you can expect this second 72 level to be confirmed if the first one fails. All right, so that's all about US dollar Swiss franc. We are expecting bullish trades, and I'm currently not expecting shorts anymore. Next up, Euro AUD. On Euro AUD, price completed the order flow, completed this whole entire bearish order flow until the order block and volume gap fill. And what we see right here is that, yeah, we have tons of bearish ranges. So I'm just going to make a little bit of clear up right here. I'm not really expecting longs. I'm still expecting shorts because of the bearish pressure is so strong. After this huge bearish pressure, expecting a long confirmation here on the 15-minute time frame will be a dumb idea. So I'm only looking for shorts because technically we are bearish. Really strong bearish pressure is happening. But at the daily perspective, this is a protected daily low point. So we are inside of a protected daily low point, but we are not trading the daily time frame. We are trading the 4-hour and the 15-minute time frames. So what we are looking for here is that I'm going to adjust the Fibonacci levels. First level, I mean the higher level, is adjusted down to the low point, and the less recent level is adjusted right here. So we have these two 71 regions, and we are expecting these 71 levels to be confirmed. Question, if you can take longs, once again, I would not take longs. I will not get involved in any longs anywhere in between. Let me just show you the 4-hour time frame again. Anywhere in between the current price action and the 17 level, I will not take longs. What I am aiming for is hyperbole setups, and hyperbole setups will come from these 71 levels. So if one of these levels is getting confirmed, you can take short trades targeting the external zero low point. So this is the plan in Euro AUD. Most likely, price is going to continue in a bearish direction and will break the last recent daily low point as well. For one reason, because what we see right here is again almost perfect double bottoms. You can see that this almost perfectly lines up with the second low, and this is just pure liquidity, double bottoms to target with the shorts, for the shorts. So once again, we are expecting these two bearish levels to be confirmed and to take shorts there targeting the external 4-hour levels. Anywhere in between, I'm not going to take long trades all the way up to these levels because I'm not interested in trading the counter order flow. Next up is GBP GPI. On GBP GPI, what we had here is that, previously we just mitigated the extreme 71 level range right here from where we aggressively dropped down. And from this drop down, what price made here, what price did here, is that it swept out the extreme low point. And from this sweep, it aggressively skyrocketed to the upside. And now we are near of mitigating that 71 level of the previous range we just marked out. So the plan right here is pretty damn simple. We are going to mark out a bullish range as well. I don't know where price will stop, but you will be able to mark out a bullish range. First, let me just explain, okay? So we are expecting this bearish 71 level to be confirmed. We are expecting price to come up to this level, creating like a mitigation, confirmation entry, sweep of a high, break of a low point, shifting the flow, and then entering here. And we are going to take these shorts, but we are going to TP out on the bullish level. So we are going to pull out the bullish level from low to high point for one simple reason, because the low point, extreme low point, is taken out from where price aggressively rejected and reversed to the upside. Therefore, this level holds value. So we are going to take the shorts, but at the same time, we are going to look for longs at the 71 level once the mitigation happens here. And we are going to close out all the sell trades and not look for any more sell trades after the mitigation of the 71 level. And we'll switch the bias to looking for bull trades. And we are going to execute long trades targeting this external, technically internal 4-hour level. So this is the stupid simple plan on GBP GPI. Let me just take a look at the 15-minute time frame. Yeah, no mitigation on the 71 level. This can be taken as a mitigation if price somehow creates a really aggressive setup, like sweep of a high point from where it really aggressively shifts the structure to the downside with volume, anything. Then this setup can be taken because this mismitigation is missed by, let me just check. Yeah, by 1 pip. So price missed the mitigation of this level by 1 pip. So if it creates a confirmation setup right here, somewhere right here in this region, you can take that short. But if price comes up to sweep out this high point into the 71 level and from there it rejects and breaks the structure and shifts the flow to the bearish, then this will be the best possible setup to take, and we are going to TP out these shorts on the bullish 71 level once again, where we are going to look for bullish setups, bullish trades, targeting the 4-hour high point just right there. So this is the plan on GBP GPI, and lastly, we have gold. On gold, technically what we have right here is that price previously broke this external huge swing range, and the break has happened technically from this high point, and we have this bearish range coming from the high point down to the low point, and basically there is the 71 level which we can confirm. Anything else about gold? No, I would say that everything that is below the 71 level right now is noise. Gold is ranging. It's ranging, accumulating in this range. So what we are expecting is the accumulation stage, then the sweep of the accumulation high point, then the distribution. So we are expecting this to happen, and I'm expecting the 70 level to be confirmed First of all mitigated and then confirmed. And yeah, this is the watchlist update. I'm just going to quickly look at GBP US dollar. Uh, yeah, this will be the pair that we are going to add to the watch list alongside with AUD/USD, alongside with GBP NZD. I'm just going to give you a little quick, fresh outlook on these pairs. Not a full outlook because quick question to you guys. Please use the chat because it will be a really important question to you. What I have in my mind is that I already announced that Sunday can be a backtesting webinar day. But what I'm also thinking about is that on Sunday, what we can do is to have a big watchlist breakdown webinar where I break down in depth these three new pairs. So on Sunday, we can have two options. React on the chat, whichever suits you. Let me just quickly write, do not write anything. First option is the backtesting webinar. Second option is the new pairs breakdown webinar. So whichever suits you, put a thumbs up. No. Stop. No. Just quickly, simply react on whichever suits you better. So whatever you prefer, have a backtesting webinar or have a new pair breakdown webinar. Once again, first option is just simply having a backtesting. Second option, having all the 5 current pairs broken down and having an in-depth breakdown of these 3 new pairs. Both of them could be valuable. Both of them could be great for you. Decide whichever is suitable for you, please. All right. In the meanwhile, yeah, these will be pretty great pairs to the watch list. So let me just give you a quick explanation that why we are adding these new pairs to the watch list, guys. So in the meanwhile, while you are voting for the best option, please listen to me. So why we are adding these new pairs? We have 6 pairs on the watch list currently. Trade frequency is not that high. I mean, we are averaging like 2 to 5 trades a week. That's like, yeah, we have a trade every second day or so. Or, you know, sometimes we don't have a trade for 4 days straight. Then on Thursday, we take 5 trades. Yeah, we are averaging 2 to 5 trades a week. Not high frequency of trades. But the win rate, I would say, is pretty high. But this puts unnecessary pressure on some of you guys and can easily force you into FOMO decisions by not being capable of waiting for the trading plan to be fulfilled and rushing yourself into opportunities that are not correct according to our trading plan. And by adding more pairs to the watch list, we'll increase the trade frequency, meaning we will have more trading plan following setups. We will have more opportunity to trade. But at the same time, you have to get prepared that we will have more losses because increased trade frequency equals to increased losses. At the same time, it is increasing the amounts of win as well, but you have to get prepared for this psychologically that we will have more trades equal to more losses. You have to handle more losses psychologically, emotionally, mentally, but at the same time, you will win more as well. So your wins will outweigh your losses, just like it's outweighing now, but you have to mentally prepare for losing more because of the increased trade frequency. And what the plan is? What the plan is right here is that we are going to start the beta testing this week of the new entry model. What I am testing out with this increased pair watch list is that which will be more efficient to trade. So we are adding 3 more pairs to the watch list, having 8 pairs in total. We are going to test this out for a few weeks, few months to see how it performs. At the same time, we are going to test out with the beta testing crew the new entry model for a few weeks, few months. Whichever performs, the new entry model will be only tested on the 6 pair watch list. Whichever performs better will be kept permanently in the academy. So if the new 8 pair watch list can make more money, more risk to reward ratio in the testing period than the 6 pair new entry model watch list, then we are going to keep the 8 pair watch list without the new entry model. If the new entry model with the 6 pair watch list will be able to create more risk reward ratio, then we are going to add it to the academy and we will keep it permanently and go back to the 6 pair watch list. So this is what you are experiencing right here is a pretty nice beta testing, live testing flow that we are doing in this community to actually improve the overall performance of the academy. So you're part of something really huge and nice currently that is happening right now. And yeah, I'm grateful for you guys for being here and being part of this community and being able to actually make improvements in the community and the academy. So yeah, this will be a really huge thing. The only thing I can promise you guys is that whichever option is getting capped, it will be a really great improvement in the academy, and we will see even more funded traders being created and even more wins on the long term. So yeah, right now let me just stop the recording and have question and answer. If you have any kind of questions, then you can shoot ahead and let me answer them right here.